It's Amphyfx here. So today I'm going to be talking about key levels, what they are, how to identify them, and the reason why you might need them or use them as your extra confluences you're trading to have a higher win rate. If you stick to the end of this video, I'm sure you're going to learn one or two things from me. If you're new to this channel, don't forget to hit the subscribe button and like this video and share with your fellow traders. So guys, let's dive in. So key levels. There are levels in which the market reacts have reacted to like several times and respects it. So you can use these key levels as well as an extra confluence. It doesn't matter what you trade, whether you trade structural liquidity points of interest, or you trade your normal supply and demand, or you trade turtle soup or wherever, doesn't matter. As long as you understand what market structure, where the market is going, and also what identify the key levels in your markets, which I'm going to be showing you guys on this in this video. So your key levels must be what? They must be in agreement with what? With market structure for it to be valid. So if your key level is against what? A market structure and you have what? You have a setup which is against it. It's there is a low probability of it playing out. But if it is in line with what? With the market structure, there is high possibility of it playing out. So what are key levels? Just like I said, let's say for example, we have a level here. Market reacts here, bounce, react, again, bounce, react, right? Then bounce, then this, right? So this level here is what refers to as what? As a key level. Why is it a key level? It's a key level because market what? Market came, bounce, right? Came again, bounce, meaning what? Market is respecting this level, came again, bounce, right? Came again and what? And bounce. So this level is what refers to as what? As a key level. What are you anticipating in the future? You are anticipating market to what? Market to come back to this level. Either to what? And what are you anticipating? Since the market is bearish clearly, breaking structure to the downside, break of structure, break of structure. Definitely, let's say you that trade SMC, your normal support, so your normal supply and demand. What are you anticipating here now? You're anticipating the market to what? To reverse, come back to the same level, and then what? And then bounce back. So, as a normal SMC trader, what are you looking for? You're just waiting for market to come back to your what? To your supply zone. Then what? Get your entry. So this key zone here has given you what? Has given you an extra confidence or confluence. Why? Because it's a key zone and markets have what? Tested that zone several times. It's just like your resistance level. Well, in this sense now, just like I said, even if you're normal retail trader, your supply and demand, it doesn't matter. As long as what? As long as your key level is in line with your what? In line with your structure, it will play out fine, right? So what are you looking for? You're only waiting for market to come back to this same level, bounce again, right? And let's say for example, let's say we have another key level, market bounce, bounce, came and then eventually broke below it, and then what? Retested that level again. Then what? Oh, so what this level here is what refers to as what key level. Why? Market reacted here, respecting this same level, reacted there, broke below it, reacted there, and then what begin to what sharply drop. As a normal retail trader or even SMC, you what wait for your supply zone. What are you looking for? Wait for supply zone, right? For market to what approach this zone again, and then what begin to what fall even lower. So that's the essence of key levels. Key level basically, they are just levels where markets have what tested several times and is what respecting that zone, or is respecting the zone several times. Now let's go to the chart, look for examples. Alright, we have example here. What do you see? Market was bounce at this zone. This is a point. This is a key level. Why? Market was tested the level several times. Market came, broke above it, bounce, went up, bounce, still respect that zone, did not break like further below it, went up, bounce again. Can you see? Then what? Eventually broke structure to the upside. Now, as an SMC trader, or whatever you trade, I don't care if whether it's support or resistance. Many people will like take this level as a support zone and it's still fine. So as a demand zone trader, you mark your what demand zone, set your what SL below what below the invalidation zone, which is this level here, and then target whatever you want to what target. So you can see this explains what a key level in line with what in line with market structure. But what if you are trading against what? The market structure? What if you are trading against the market structure? That's where what? This key level might not hold. So you need to what? You need to understand what? Market structure, identify key levels, which I just like explained to you guys. Key levels basically is just what? Either your support level or your resistance level, or levels where what market have tested several times, broke below it, or a support level turns to what resistance level, or resistance level what turns to support level. So guys, that's that about key levels. They are easy to identify. Just note where market is what reacting, like if it is reacting to a zone, like keep respecting that zone. That's a key level. Doesn't matter any strategy you trade. So guys, if you learn something from this video, don't forget to hit the like button and share this video to a fellow trader friend to help them understand what key levels are. And if you're new to this channel, don't forget to hit the subscribe button and join my free WhatsApp group. You can find the link in the description below. Thank you for watching this video and see you in my next video guys. Peace out.